All right, welcome to The Explainer. Today, we're diving into an investment opportunity that, well, it might not be on everyone's radar, but maybe it should be. We're talking about the Pakistan Stock Exchange. We're going to unpack the key benefits that are turning some serious heads, everything from immediate financial value to that long-term strategic potential. So let's just get right to the heart of it. The big question for any investor, right? Where can I find real value? If you're out there searching for high growth potential, but you don't want to pay those sky high prices, then you'll want to pay close attention. The Pakistan Stock Exchange is making a really compelling case. First things first, let's talk about the numbers. You know, the stuff that directly hits your bottom line. We're calling this the financial edge because it's all about finding that immediate, tangible value that you can see and measure. Okay, so benefit number one, and it's a big one, is valuation. Companies on the Pakistan Stock Exchange, or the PSX, they often have lower price-to-earnings ratios. And that's a key metric that smart investors use to hunt for companies that might be undervalued. So what does a lower PE ratio actually mean for you, the investor? Well, think of it this way. You're basically buying $1 of a company's profit for just a fraction of the price you might have to pay in other, more crowded emerging markets. It's really about getting more bang for your buck. But listen, attractive pricing is only one piece of the puzzle. What if you're an investor who's focused on income? This brings us to the second huge financial advantage here. We're talking about consistently high dividend yields. And we're not talking about small figures either. A lot of companies listed on the PSX are offering annual dividend yields somewhere in the range of 6 to 10%. I mean, for investors who are looking for that steady, passive income stream from their portfolio, numbers like that are pretty hard to ignore. And just to put that into perspective, take a look at this. When you put the PSX average, which is around 8%, right next to the typical global average of just 2%, wow, the difference is just striking. This isn't just a small edge, it's a totally different level of income potential. Okay, so moving beyond those immediate dollar signs, any smart investor is always thinking about risk and security, right? So let's dig into the strategic framework that actually underpins an investment in the PSX. You know, a huge part of managing risk is diversification, and the PSX really delivers on this. The exchange isn't some one-trick pony. It gives you access to a whole array of crucial sectors, everything from banking and tech to energy, manufacturing, you name it. This lets you build a really balanced portfolio so you're not overexposed to the ups and downs of just one industry. Now, here is a term that is absolutely critical for any foreign investor. It's called repatriation of profits. In plain English, it just means, can you actually get your money out? When you make a profit, can you send it back home? It's a simple question, but the answer is incredibly important. And the answer, thanks to regulations from the State Bank of Pakistan, is a clear, unambiguous yes. Foreign investors can legally repatriate 100% of their profits. For anyone who's investing internationally, this is a massive, massive confidence builder. It just removes a huge hurdle that you might find in other markets. Okay, so we've got attractive valuations, we've got high dividends, and a secure framework. But what about the future? Let's zoom out a little bit and look at the long-term growth story, because this is all about positioning yourself for what's coming next. Pakistan's economy isn't just sitting still. It's an emerging market that's really in motion. It's going through key market reforms to modernize, and it's seeing some major industrial growth, especially in sectors like textiles and IT. That combination creates a really dynamic environment, offering some serious potential rewards for investors who get in ahead of the crowd. So you can see there's a pretty clear pathway here for potential returns. The reforms that are happening now are the catalyst. They spark industrial growth, and that growth then lays the foundation for substantial gains down the line. It's a logical chain reaction that early investors can tap into. All right, we've covered a lot of ground. The financials, the strategic setup, and that long-term potential. So let's pull all these threads together now and assemble the complete investment case. When you boil it all down, the case for the PSX really rests on three very clear pillars. First, you've got the financial edge, with its attractive valuations and those juicy dividends. Second, the strategic framework, which offers diversification, and crucially, that secure profit repatriation.
And third, the long-term play, which lets you tap right into Pakistan's emerging market growth. It's a really compelling, multi-layered argument.
Now, knowing the why is one thing, right? But knowing the how, that's the next logical step. And that's why in our very next explainer, we're going to get super practical. We'll walk you through how to select the right brokerage firm in Pakistan to actually help you get started. So we'll leave you with a question to think about. In a world where it feels like most investors are all looking at the same crowded markets, could the Pakistan Stock Exchange be the strategic blind spot in your global portfolio? It's definitely something to consider. Thanks for joining us on The Explainer.